Hi, we're Joshua and Amy Phillips.
Yeah, and together we're the Phillips team at Churchill Mortgage. So, welcome to our channel. And today we're going to talk about the closing costs associated with getting a mortgage. I know something that everybody really wants to know about.
Yeah, I love that scene from Jerry Maguire. You know, the one where he says, "Show me the money."
Yes, I know that.
Show me the money.
I love that scene. I love it. And I actually use that analogy or use that reference when I'm talking to clients about the funds that they're going to need for closing, is that there is a need for you to show me where the money for closing is going to be coming from.
Yeah, and there's a need for you as a consumer to know how much money is it going to take for me to purchase this home. Right. And we often think about first the down payment, hey, kind of 3% down, 5% down, 20% down, but there's also closing costs associated with a loan. And that can be a little bit of a mystery, I think, in terms of, because you may be looking at 15 different fees associated with closing out a loan. And so we want to take a little time to break that down for you into different categories to make it a little easier to understand what the different costs are associated with the loan. So I'll take the first category, which I would call lender fees. So every lender is going to have a couple of fees that go directly back to them, and they go by a lot of different names. It really doesn't matter what the name is. It could be a doc prep fee. It could be an underwriting fee, a processing fee, an admin fee. It doesn't really matter what the name is. There's going to be a couple of fees that go back to the lender, and so that would be the first category, would be lender fees.
Sure. So the next category is going to be basic closing costs, general, right? So that really is a catch-all phrase for the majority of the closing costs that are going to be dictated by someone else, whether that be an appraisal fee, credit report fee. The majority of that category is going to really come from the title company itself. And that's something that you, your real estate agent, the seller's agent are all going to decide on and are going to include in the contract, is who you're going to use to help you close on your mortgage or close on your loan. And we will just contact them and say, we need a list of your fees, and we will put those in. So no matter what lender you're talking to, those fees just don't change because they're determined by someone else.
And again, that's the bulk of the closing costs. And then the third category, for breaking it down to categories, would be discount points. And we've talked about that in the past. Discount points are fees you can pay to buy down your rate. Now, I would say it's normal and common here in 2023 as we're making this video that pretty much every loan is going to have one discount point. But you can potentially pay an additional 1 or 2 points to buy down your rate. And this can be a substantial amount of cost, as each point is 1% of the loan amount. So that is a category that can fluctuate depending on if you want to buy your rate down further or not. But that is a significant category as well.
So the last category of costs associated with the loan is really a bit different than closing costs. And we have talked about this one before as well, and it's going to be your escrows. So escrows, as a refresher, is the account that is going to be there to take care of your property taxes and your homeowner's insurance. And so this is a category of cost that you need to prepare for, because you're going to be paying 12 months of your homeowner's insurance, 1 year premium in advance. And you're also going to be setting aside a couple of months worth of homeowner's insurance to prepare for next year's premium, and a couple of months worth of property taxes to pay taxes when those come due. And so that's a component of the cost needed for closing that you really do need to be prepared for, in addition to the other things that we've talked about.
So just to recap the 4 categories we talked about, we said lender fees, we said basic and normal closing costs, we talked about points, and then we talked about your escrows, which are also called your prepaid items. So those are your 4 categories of cost. Now, this may sound a little overwhelming. Again, you're talking about numerous fees. Well, here's the good news. We do have ways that we can share those numbers with you, and any good lender is going to be sharing those numbers with you from the start to the finish. And there's several important touch points we can work through. So the first one would be upfront. When we're just initially having a conversation, maybe we're working on a pre-approval or an underwritten pre-approval, we're going to present you, and there's different names for this. It could be a summary. It could be an itemization worksheet. Sometimes there's fancy online things we can use. But all of them are designed to actually break down the numbers. Now, these will just be an estimate because we can't give you specifics without a contract and a specific home in mind. But we can give you a really great idea. We can break it down item by item, and we can actually go over those items with you so you don't have to go into the process confused about what's going to cost later in the process.
Yeah. So actually, once you are under contract, the next phase of disclosing numbers and for you to receive some estimate of what to expect is officially going to be called the loan estimate. Now, again, that's an official form, a little bit different than the itemization worksheet because it's specific to this home that you are under contract for. So on that loan estimate, we're going to include the specific title company fees. We're going to include the specific property taxes and everything that is very detailed pertaining to this home that you're looking to buy. And so this loan estimate will come in your initial closing disclosures, the things that you're going to sign right out of the gate. And so it gives you a great estimate of what to expect as we head into this loan process. And in my experience, the loan estimate lines up pretty closely with what we see as we move through the process or once we get to the end.
Yeah, and here's the good news for you. Once you've gotten a loan estimate, we as a lender are actually committed to those figures with very little wiggle room. And if anything changes, as the process proceeds, we actually have to present you with something we call a change of circumstance, and we have to actually explain to you why the fee increased. And we have to have a legitimate reason for that to change. So it's not like we can just change the numbers. You've heard the term bait and switch, and that was always a real worry, I think, in the past. But today, I mean, certainly if a lender is being compliant and doing legal work, they cannot change the numbers just on a whim. Just because. We are committed. Once we give you that loan estimate, we are committed for the vast majority of instances. We are committed to what we give you. So you can take some peace of mind knowing that this is going to be extremely close, within a few dollars, ideally, of what the final numbers are going to be.
So for when we get closer to the end, obviously we're looking at a several week process after you're under contract. And now as we head toward closing, we are looking to firm up the numbers. That final set of numbers that you're going to receive, very similar to the loan estimate, is going to be called the closing disclosure. Now, we're required by law to get that to you within 3 business days before closing. I think historically some lenders had kind of been working on the fly and just barely gotten the numbers to people right before closing, which seemed a bit unfair. And so there's just new rules in place, which I think is awesome, to get you the loan numbers well in advance of closing so that if you have any questions, you can look through things. Now, again, the closing disclosure should match pretty closely with what you've seen on the loan estimate, but obviously there may be a few tweaks here and there, and the closing disclosure should give you a great estimate of what you can expect as you head into closing, how much you're going to need to wire, and what your monthly payment should be, and all the ins and outs of where things have landed.
Yeah, and technically, the one you get 3 days before closing is considered a preliminary closing disclosure, and then you get a final closing disclosure maybe the day before closing. So all these numbers, I mean, should literally be, perhaps dollars apart, or there may not even be a dollar difference between the preliminary closing disclosure and the final closing disclosure. So here's the overarching theme. It's important for you to be communicated with, and I think that's something that we strive to do here in our mortgage business at Churchill Mortgage, is to communicate with the customer so there's no surprises, so that you fully understand from the first conversation we have to the closing that there's a good understanding of how much money it's going to take to actually close on the loan so that you can show us the money, right? So
that's right.
Anyway, so we and of course we're always available throughout the process for questions and any concerns around any of the costs, but hopefully it's been helpful to you as you've listened to us talk about the different types of closing and the different ways in which we share that information with you.